Okay. Well, thanks everyone for coming to the Infinicept webinar. We love doing these and we have great engagement from everyone. Couple things. First of all, if you have a question, feel free to raise your hand and ask. As Tu said, you don't have to wait for the end. We love getting questions. We usually go about 40 or 45 minutes, but we leave an hour in case there are so many questions that we're fending them off. So I'm Todd Ablowitz, as Tu said, and co-founder and co-CEO of Infinicept. And what we're going to talk about today is the rapid change in technology at the transaction and in the payments business, and some of the ways that our experts have seen software companies be able to take advantage of the technology and the choices, and then also how they adapt as things change. So first of all, I'm going to let you guys introduce yourselves. We'll start with Coy since he's off video. Can you guys each, starting with Coy, tell me about your career arc? I've known you both a long time, but I think everyone would really enjoy getting a sense to know something about how you got here. Coy?
Sure. Yeah, sure. Coy Christensen. I am currently the president and chief product officer of a company called PayMeTV, based out of Florida. I have been in the payment industry a little over 25 years, somewhere around 27, 28, somewhere in that range. I actually started out in the payment industry on the hardware side of the business. So I actually went out and built what at that time, back in the 90s, was standalone terminals. Everything at that point was mostly standalone terminals. And I worked for a company called Hypercom, who no longer exists. It's since been bought and split up multiple times. From that, I went into a bunch of startups, specifically around electronic wallets, virtual wallets, loyalty type programs, and did some contract work here and there for PayPal and a few other companies in the industry, and then ended up with a small startup called Element Payment Systems, where I was head of product for Element. We specifically, with that company, had a gateway, and we're really pursuing the ISVs, or the software solution providers out there, and created a marketplace. We were one of the first few companies that really pushed that. And from there, we had a gateway, and then on top of the gateway, I built out a product called Tripos, which was a middleware product that really allowed people to take advantage of card present, specifically and especially after the EMV regulations came into effect. And that company ended up getting bought out by Vantif, who then grew it, and I stayed with the company as it grew. It ended up buying WorldPay and eventually got bought out by FIS. And during that whole time, I kind of just kept on picking up various platforms from the various companies that were being acquired underneath the integrated payments arm of the company, which was specifically focused around the ISVs and VAR marketplaces. I decided to leave that just a couple of years ago and go pursue my own thing, and so left at the time left FIS and went off and did some contract work for about a year for a company called ID Tech, and then after that, I started my own company with a couple people I'd met throughout my 25 years in the industry, and we now have that going fairly and growing very quickly over the last year and a half, 2 years.
Awesome. That's great. Well, it's great to have you on, Coy, and I love all that deep experience with the gateways, both card not present and card present. Dustin, let's put it over to you.
I'm Dustin Young. Hi, everybody. I've been in the payments industry for a little over half my career, and that's really been a mix of both startups, some of which I founded, some of which I've worked with, and large companies. So I've spent some time at Vantiv. Coy, our paths likely crossed at Vantiv a number of times because we were there with the whole Tripos acquisition, or I was. And I've spent the past 7 years at Visa. And actually, I just stepped down from my role at Visa. I'm semi-retired now, officially, and I'm really enjoying conversations like this with friends like Todd. And the one thing that's been a hallmark of my time in payments is I'm awkwardly passionate about embedded payments, awkwardly passionate about payment facilitation and super passionate about the acquiring industry as a whole. I've spent a long, long time working with very large acquirers, helping them advance their payment stack to take advantage of some of the innovation that's just coming at us in a rapid fire pace, as we all know. So Todd, I'll be brief. That's me.
Awesome. Well, let's get started. I've been on the record that my view that the payment system, the industry, the environment, the technology, it's always been a changing force. And that change, much like technology, really overall, you can see the charts that just technology is going faster and faster. And the payment industry is in not only its technology, but in the business model and whatnot. So let's start with Koy again. What do you think about that? How do you look at it? And can you give some examples where you've seen that?
I mean, there's lots of examples where things are changing and have changed significantly that have completely overturned the whole industry. Things like EMV, for example, caused the whole industry to set back, especially in the card present world, right? Caused the whole industry to set back and have to re-terminalize and completely reintegrate to the whole solution, recertifications, things like that. You have the soft pause that's coming out that plays into that as well. That's, I think, is going to have some major effects over the next couple of years on how things work within the industry. I think the regulations are going to loosen up some significantly around the soft pause that allow it to work in areas that currently it's kind of prohibited from functioning. And then I think you have like EMV in the cloud. EMV has been a headache for pretty much anybody who wants to do card present within the space. Certifications take a long time, so you have to find alternatives to that, which is part of this diversity and the ability to have diverse solutions in there. And right now, EMV in the cloud should simplify that a little bit, but it's still gonna create some havoc for people, but it is going to change how you integrate moving forward on the EMV side. But I think in general, I mean, even if you step back and just look at what you want to do from an integration, just the idea that we've gone to things like now, I mean, it used to be, you talk about card present, and that's kind of where people looked at that in the past, was just the card present world. And now you have card not present that's really picked up over the last 20 years. And then more recently, you have a lot of in-app stuff coming out, and people focused on in-app stuff that's been there for the last 10 years, right? So all those things, and there's more coming on that, right? All those things really, really, really affect how you move forward from an overall solution and how you integrate and where you go from that standpoint.
Well, let's double click on that for a sec before we really go on the impact of these things. Let's talk for a second. Can you talk a little more, when you talked about soft pause? I'm not sure everyone knows what soft pause refers to, and I've heard some other names for it too. I won't steal your thunder, but can you unpack what soft pause is? And then I'm going to do the same with EMV in the cloud and make sure we all are speaking the same language.
Yeah, so soft pause is the idea that I can just take my phone and use my phone for actual payments or an iPad or something of that sort. In other words, you don't have to specifically have a point of sale solution in place. Like you normally would go out and buy a Verifone terminal or Ingenico terminal, and the tap of the card this really plays into contactless. The idea would be that you tap the card on the terminal today, and that's how you collect payment. The idea behind soft pause is that there's a piece of software that resides within the actual device. For this use case, let's just say your phone, and then you have the encryption within the security part of your phone that enables you then to take a tap of the card specifically on the phone for payment. And soft pause has been around for a few years. It's probably been around for, I'd say, 6, 7 years, 8 years now. But the regulations of it have been restricted to limit what the capabilities are, the amounts that it could take. Those things are changing, and so as you look and as you go forward, I mean, the need for a terminal with what we have, I mean, the phone is much more powerful than most standard payment terminals that are out there. So the idea would be that moving forward, that you can actually just use a phone or some sort of off-the-shelf type device for collecting payments. And
So what you're
that's card
saying,
present payments using contactless.
so what you're saying is when I go to this farmer's market, instead of tapping the white square device, I can just tap it on the person's phone. I just take my card out and I tap it on the phone to get my crepes or whatever I'm getting at the farmer's market.
That is correct. That is
And
correct.
we saw evidence of this when the iPhone came out and some of the specs on contactless, it was clear that they were going that direction. So that's really cool. And I can imagine, I mean, that's a big deal for farmers markets in the US, but around the world, that's going to change a lot of things because the cost of hardware not being required really opens up the opportunity to accept more payments. So that's a cool technology, and definitely I agree with you. I see that being far more adopted as time goes on the next 12, 24 months. So let's do the same thing with EMV in the cloud. What is EMV in the cloud?
So the idea right now is when you talk about EMV and certifying EMV, you have to get kernels. Kernels are the specific software, that's been certified for that EMV to match up to the EMV cards. That kernel getting certified has to be certified every so often, right? And you have to keep on recertifying. The interesting thing is that family of kernels can get certified, but if you look what happens to the people that are providing the solutions out there, specifically around EMV card present type solutions, they are constantly 100% of the time in what would be considered EMV certification mode. In other words, they're never out of the phase of certifying their products just because of the expiring EMV certificates, the changing of products, things like that. The idea behind EMV in the cloud is that the actual certification of the kernels actually reside in the cloud, so to speak, so that you actually can update them without actually having to make the big modifications to the hardware from that standpoint. So the idea would be that you can actually certify through the cloud, the EMV in the cloud, and then moving forward, you don't really have to mess with that aspect of it as you go forward. And as the kernels update, you just update in the cloud and you certify. It should simplify. The goal is to really simplify the actual certification process as you move forward.
Got it. So what I'm hearing is that if you want to manage terminals, you got a lot of stuff to do. That stuff is hard to do. They're trying to make it a little easier by putting it in the cloud. And when you're thinking about your technology provider, you got to think about who's going to be keeping up with all that stuff. At the same time as you're thinking about, well, who has this soft pause thing? Because I still have cards that have a chip on it that I have to insert. That's what you mean by EMV, right? And so I've got to be able to handle that, and I want to be able to handle it on the phone. Interesting. All right, Dustin, what do you think about this? Going back to the question since we talked for a minute, thinking about the change that's happening in the industry, the environment, the technology, it's accelerating. Do you have any examples?
Yeah, this was a fun conversation to listen to because I could not agree more with both of you that things like soft pause and things like EMV in the cloud and improved certification are foundational technological advancements that allow us collectively as an industry to remove friction from payments. So I'll answer your question, Todd, less from the technical side, more from the experiential side. And I think there's two major evolutions that are happening. And one is the broadening of the context for payment acceptance from a consumer point of view, right? So it used to just be a very standard kind of consummation of an actual engagement with a merchant. But now you can actually have payment experiences embedded in scheduling processes. You can have them embedded in content. It can be a mobile experience at table or text to pay or QR code. So the context for payments acceptance from the consumer point of view is changing greatly, enabled by these technologies that you all mentioned, and another, which I'll just give an honorable mention to, which is the capacity to authorize transactions and authenticate users much more reliably now than we could in the past. So that's the consumer context. The second is the merchant context of acceptance. Things like soft pause all of a sudden make payment acceptance, or digital payment acceptance anyway, the purview of smaller and smaller and smaller merchants. So we're able to support this vast ocean of micro merchants around the world that are now coming into the fray and give and introduce them to digital payments because of things like SoftPOS, because of things like better fraud algorithms. So we've got such incredible broadening of the payment context for the consumer and the acceptance context for the merchant that is really removing friction and allowing more and more people into the ecosystem.
So as I sit here, I think about being a software company, and some software companies have been in payments for a really long time, but a lot of software companies can barely spell payments. And I think about it, it's like, whoo, we've got something called EMV, we've got something called SoftPOS, we've got you mentioned new fraud capabilities. I assume that's going to be something I have to deal with, or my merchants can have to deal with. And how do we make it easy for them? How do I make it easy for them if I don't even know how to do it? So how do I get access to these technologies? It seems like it's a very legitimate and big challenge for a software company to keep up with it.
It's a heck of a point, Todd. And if we look under the moniker of removing friction from payments in general, I think these technologies are, yes, allowing consumers and merchants to much more easily interact with payments. But I think perhaps the most important thing is that it enables third parties, software vendors, partners of these merchants, right, to much more easily embed payments within the context of their applications and allow merchants to reliably interact with these software vendors, because these software vendors now have the capacity to integrate to payment capabilities that they never could before. So a software vendor who may be far more focused on the core capabilities of their application rather than the drudgery of payments are now able to offer payments embedded within the context of what they deliver to the merchant. And so it greatly changes the context for the software vendor, the partner of the merchant, who are able to offer payments where they couldn't before. I agree with you completely.
Yeah, this is interesting. Well, let's keep going down this hardcore product path for a second, because I think what we're laying out, a little bit of jargon, a little bit of industry stuff, but what we're laying out is sort of the complexity, not just how deep the technology work may be. We like that certification stuff, which is horrifying. I wouldn't want to have to do it, but across so many dimensions. And that's where I want you to go next, Coy, is let's categorize the diversity of payment solutions at checkout.
Yeah, so I mean, this is something interesting, and this we talked about it a little bit, hinted on it as was being discussed earlier, which is, what type of solutions do you want to provide as a merchant, and that feeds back into the software, the solution provider that's sitting behind the scenes there, in terms of the software provider. I mean, what are you trying to provide for your end merchants? I mean, if you categorize it at the three basic, right? It's basically card not present, right? Which when you talk about card not present, you talk about, which was mentioned earlier, recurring billing, the calendar-based type setup. It could be as something as you buy something on the web and you're paying for it on the web. It can be as much as a card not present in terms of text to pay, as was mentioned earlier as well, where you're sending a person a text or you're sending them a link that they're then going and paying on that link. And then you get into card present, where, what do you want to accept? Do you want to accept contactless cards? Do you want to accept contact cards? Do you want to accept magstripe? Do you want to do tokenization of these cards so that when you actually do something within a card present, then I can now use it for card not present for that recurring billing. So the first time I walk into a gym, I actually give them my card. I swipe the card. I make for my first payment. They take that card, they tokenize it, and now they can use it in the recurring billing function so that they can automatically bill my recurring payment for my gym membership on a monthly basis. And then finally, do I do stuff in app? And what do I do in app, and how do I collect in app? And all these things, not only do they each have specific requirements within their own specific category, whether it's card not present, web payment, card present, or in-app payment, it all then also plays into, what if I want to offer multiple of these? What if I want to offer card present and card not present, both within my solution? What options do you have there? And as you look at what's available and where you're going with it, right? These you want to find, and I think the very valid statement that was made, is that these software solution providers typically are providing solutions for the whole business. And I think that was mentioned earlier, that the payment piece of it is really only about 10% of the solution they're actually providing. So the payment piece has to be made as simple as possible. So the goal here is what type of solutions are available, so that their integration, their development to these type of things allow them to easily integrate, and not only just integrate to the card not present, but also provide the functionality within the card present that the actual merchant wants to utilize within their environment, that fits into their environments and lets them meet the needs of their actual consumers within that environment, and interface with those consumers in the way they want to interface with them. So,
well, and we talked about card present, or tap, dip, swipe. We talked about card not present. Put your card in to get goods or services. Maybe they keep the card on file and hit it again. Maybe it's recurring, so you pay your gym membership every month. But we also didn't talk yet about some of the innovations on that side with mobile phones. So would you consider that card present, card not present, or a third category? And why don't we unpack that a little bit?
Yeah, so I actually, if you take me in, and if you look at it from a straight processing standpoint, a lot of it is card not present from a straight processing. However, from a actual integration standpoint, since a lot of the people that we're talking to on this call are software developers, I actually see it as its own category, because everything in app requires specific things. So if I'm doing Apple Pay on web is one thing, Apple Pay for card present is a different, Apple Pay for in-app is a different one. So the idea that when you look at them from a straight industry standpoint, a lot of that in-app would be considered card not present. However, when you actually look at it from a technology standpoint, I actually consider it its own category now, because a lot of the requirements around it are very unique, right? Especially if you want someone to automate. Now, if you're a high-end, big, like let's just say like Uber Eats or something like that, yeah, they have lots of developers. That's where they focus. They're going to build everything themselves, and because they're doing that, it's not a big deal. That from that standpoint, it's just a card not present transaction. But for the standard software developer that doesn't have that level of development or that level of financials to go build all those things in that same way, having the capabilities or having solutions that help simplify the in-app type components are significant to speeding that delivery of that solution. So I actually consider it its own category based on what I dealt with in the past with various integrators.
So if I hear you correctly, you've got card present. Well, we didn't mention card present. I think you said you got Ingenico terminals, you got PAX terminals, you got Verifone terminals, you got some of the smaller companies that have been building terminals, and you could be coming across merchants that have those, and if you don't support it, they toss them in the trash and you give them a new one, right? So then with card not present, now you've got just a straight enter your card information. You've got a case where someone makes a phone call and the merchant enters the card. You've got a case where it's recurring billing or card on file. You've got various other things that are in-app. And then you get to the pays, as some people call them. You've got Google Pay and Apple Pay, and they don't work the same. And each of them has a tap version. That's one integration. Each of them has a pay on a website version. That's an integration. And each of them has a way to integrate it into an app. So we've already gotten to about 10 or 12 different integrations if you want to support those things. It's a lot. What do you think, Dustin? Oh, sorry. Go ahead, Coy.
Go ahead, Coy.
And I was just going to add that. I mean, that's just for your base functionality. That doesn't consider anything that you're doing unique, right, or anything special. And that's just to enable the base functionality that you're looking to support.
So
yeah, I'll make 2 points to talk to you. Obviously, this conversation has a lot of commercial implications, right? I mean, that's the elephant in the room. There's the differing price points, transactional price points for card not present, card present, and I completely agree with what Coy you were saying, that this is a third category, and maybe there's a fourth, a fifth, and a sixth. So I actually think that if we look 10 years into the future, or maybe even sooner than that, we may see different types of simplified fee structures for these transactions, because the lines are blurring. Obviously, we don't know where that'll go, but that's just an obvious implication that I wanted to state. The other thing I'll say is, I think Coy said it so well when he said that payments is one aspect of solving problems, right? And I think you mentioned it may be the 10%, but the beauty of payments are that merchants can work with their software vendors to solve business problems by using payments as a lever that couldn't be used before. So, for example, let's say you're a restaurant owner and all of a sudden you're getting crushed by employee costs and you want to remove friction from that payment so employees can be more efficient and handle a broader set of tables. All of a sudden you enter the mobile capacity to give customers the opportunity to pay a table or pay via text. All of a sudden, the efficiency in your operation increased dramatically. Let's say you're an online retailer and you've got a huge percent of guest checkout, right? There are applications, there are wallets, there are technologies you can use today to minimize the friction of a guest checkout so you have less of an abandonment rate. So the beauty of payments is that now, really unbeknownst to a lot of merchants, it is a lever that software vendors, partners to these merchants, can use to accomplish very clear business goals for these merchants that the merchants may not have equated to the payments capability. And that's part of the beauty of removing friction from payments.
So speaking of removing friction, what are some of the big trends, Dustin, in the customer experience or customer-driven activities? And what is some of that functionality? I think you touched on it briefly, but I think there's more there.
Well, I kind of view this removing friction as the long-term trend, the long-term value proposition. And some of them are it's kind of what we were saying earlier, the greatly increased context within which consumers can make payments, right? That's certainly one. I think it's the ability to simplify a guest checkout online. As I said moments ago, there's just this enormous fatigue in data entry. So you've got a lot of applications that are coming out now to try to minimize that need to input data. A lot of the banks have gotten together and launched a wallet. It's called Paze, P-A-Z-E, not P-A-Y-S. And the Paze wallet, while new, helps the consumer be able to provide simple identifying information and retrieve payment vehicles so they can check out in a one-click way versus entering all that data. So that's certainly another trend. I would say that the ability to identify a customer is going to be a growing trend. So the ability to use potentially biometric information for customer identification to simplify authentication and remove the need for step-ups, again, removing friction from the payment experience, is another trend that we'll see.
Well, we actually have a client that is doing biometrics to store payment information for like quick serve restaurants and just to make it really, really fast and easy. And they're getting amazing signups to drive their wallet activity. And I was thinking about when you were talking about data entry, the one that's salient for me is when I see that Apple Pay button on a website, I double click my side button and my address is on there and it's already going to be the right one. I don't have to remember whether it was my business card or my personal card, and make sure to put in the right address so I don't get my payment declined. So those are big helps. So Coy, when you think about, again, product guy, when you think you're both product guys, but Coy, you're hardcore tech. How does this affect the functionality of the solution?
So, I mean, it's very, very significant. I mean, the problem with solutions and finding solutions is when each company approaches their solutions differently, right? And so having the diversity of being able to look at multiple solutions allows you to basically get the things that you need, right? So let's just take card present as an example. And most people think a card present is I come to the counter and I pay, and I want that integrated to my payment system so that all the information passed over. That's a standard one, but it was mentioned earlier. What if you want to do, you want to free up the staff and you do you want to do like unattended payments where people can come up and you do a self-scanning thing, or they scan their own stuff and they pay themselves. The actual solution for those is completely different. The actual way it's built, the software behind it is completely unique. And so being able to understand what you want for your merchant wants, and what solutions you want to build for your merchant, and then being able to go out and match that up to one of the solution providers that are out there is significant. Because one, if you can't find the right solution out there, then either you're going to have to build that stuff yourself to make it happen, and that gets you into the payment world and gets you into certifications. And we you just don't want to go there right now, because just a simple EMV certifications, 9 to 12 months worth of effort level. It just, you can't get any speed at all when you talk about card present. Now, card not present is probably a little bit more flexibility, but still even there, you want to find solutions that are simple, that meet the needs they do. But just going in and do that. So versus if there's a solution available that you can actually utilize, you're talking about, from a middleware standpoint, you're doing, 4 or 5 weeks of integration, and that's it, and you're done and you're ready to go. So the solutions and the availability solutions makes a huge difference in time to market. It makes a huge difference in the functionality that you have available for your merchants, and all that standpoint, as well as, if you're going out and using a third party, you have no maintenance. So as these standards change, which, by the way, every year there are new standards released, you don't have to go do any work to maintain those standards. You don't have to maintain any of your certifications. All that stuff should be maintained by the solution provider that you're integrating into. So from that standpoint, it's a significant relief to the amount of effort that you have to do to actually make payments a product. And I know that it was mentioned earlier. I mean, the goal is always to simplify that as much. If you had taken payments, 15, 20 years ago, it basically was a little magstripe reader sitting on the side of a terminal that plugged in, and the card information came over and the clear over to the system and went right up to the processor. The whole integration would take about a week, 2 weeks worth of effort. It wasn't very much. And the goal is to try to get back to that point where you can have this, plethora of solutions out there that you can take advantage of, and all these are integrated in no time at all. And by the way, I was very interested in the biometric thing, because I know that Pay by Touch, which is a company I was a product for, actually did the biometric thing a long time ago. So it's nice to see that the biometric stuff is on its way back in. So
yeah, it's it's a cool solution. So Coy, what I'm hearing you say, there's 10 different categories maybe. Each of those has God knows how many features. Any service provider or anyone has to think about all this different complexity if they want to integrate to each of those things. But there's some companies that have built stuff on top of it that makes some of that and maybe all of that easier. But then as soon as they get it to be a little easier, maybe it's 4 weeks of development, it's changing every year, and that company has to keep up with all of that maintenance, if there even is a company that does all the different examples. So let's go even one step further on the complexity before we talk about what to do. And Dustin, when you think about the vertical software, you gave the scheduling example of like the other 90% where you sort of tie the payments into other things. What are some closely bundled non-payments functionality?
Closely bundled non-payments.
So when you're thinking of the scheduling example is one example where to schedule an appointment with a salon, you're going to pay at the end of that. The scheduling has nothing to do with the payments, but it's tightly bundled with the payment.
Well, I think content is a great, so payment capability embedded within content. We're seeing more of that in the industry, right? The capacity to be able to read something or consume some content and have an opportunity to make a purchase associated with that content that you're reading. I mean, that is a very kind of innocuous way to provide value to the consumer and also introduce a payment capability within the content to allow that purchase to happen, which could not have happened before, right? So
So on that example, Dustin, you're saying Mr. Beast puts out a TikTok and you want to buy his shirt that he's wearing in the TikTok, and you get a chance to click on it and buy the shirt. Is that what you're saying?
Yeah, and upsells and cross sells. So I'm very close to a company that does a lot of work with regard to mobile ordering. And once you take the payment transaction and the ordering flow away from the physical, you're standing there in front of somebody who's waiting to take your money, all of a sudden the opportunity for cross sell and upsell increases dramatically. And so this company is seeing tickets rise 30, 40, 50% on each individual transaction because you're presenting the customer without time restriction the capacity to make related purchases associated with their transaction. And that is a huge benefit to the customer and obviously a massive benefit to the merchant as well.
I feel super targeted, Dustin. I mean, that double dash button to get the second order when you order from DoorDash, it gets me a lot.
Yeah. Well, and it happens in a lot of industries, not just fast service food.
Yeah, that's awesome. And so, what can the ISVs do to adapt? Like how do you adapt to all this stuff, all this contextual buying? Like, what do you do
Well,
first? How do you adapt? What do you
well,
do?
I think you need to, as Coy said, tie in with a partner that provides that back end flexibility. There's all the stuff that we know, right? There's going to be changes to regulation. There's going to be certifications necessary. There's going to be all this complex guts of payments. And you want to abstract yourself from that. So choosing a vendor who is able to accommodate all those inevitable and largely known changes within the guts of the payment ecosystem, that's value one. Value two is choosing a partner that has the ability to integrate with all sorts of vendors and capabilities that we cannot yet predict. Right? AI is such a fabulous example of this. We know that AI is helping fraudsters, but it's also helping us protect against fraud. And it's impossible for any one of us on this phone call to predict who's going to win, who's going to lose when it comes to protecting transactions against this greatly accelerated capability of AI to both protect and defraud. And so having a vendor who is able to connect to the winners, make that change on the back end, giving you the capacity to delegate your authentication to the player that may have the best technology is unbelievably important for the merchant. And by having that capability, the merchant need not know who's winning and losing in the wars for AI protection of transactions. I just read this morning that AI is being used in a very sinister way to actually target price points, right? If you're getting in an Uber and you have a specific buyer profile and the battery life on your cell phone is very low, you're going to get presented with a higher price than me, who hasn't used Uber recently and I have a full battery life. There's all of this AI that's used to target price points to individuals. And there's inevitably going to be players that introduce capability to protect against that. And you as a merchant want to be able to gain that. And you need a flexible vendor to do it.
All right. So I think it's been pretty well established, super complex, changing really quickly, hard to keep up with. Almost everyone has to use some partner to deal with all this transaction technology and changes, or more likely, not just one, it sounds like. So, okay, let's put that down for a second, all of the transaction technology, and let's pick up some of the other things you have to deal with in the experience of the merchant. Coy, we've been talking a lot about that stuff with the functionality of transactions, but there's other elements of that merchant experience. And we think about things like operations or back office capabilities. What are the hidden opportunities there? And well, first of all, what are the complexities in that area? And how does that tie into this conversation? And then, where can you gain advantage?
Yeah, so when you're just running under operations of a business, right, and specifically around the merchant is, look, if I'm going to go out and do card present, card not present, I want everything to come, if I can, I don't want to have to go out to 2 or 3 different locations and then have 2 or 3 different reports or 2 or 3 different people that I have to go to get the data that I need to come back to me so that I have all my reporting come in the way it needs to come. So having someone on the back end that can then give me a single report that comes in on this, that can bring it all together, that combines it so that my billing comes in as a single bill, my reporting on my transactions come in as a single report. Anything that let me see things and simplify. Again, it's all about simplification, right? You want to make things simple, easy to understand for people, and anything that can provide that simplicity and combine those things together so that it looks like it's all one solution, even though in the back end it might be multiple solutions, is a benefit to the merchant. So that's onboarding, that's reporting, that's anything to do with the operations of the business from a merchant standpoint. This would be chargebacks, this would be tokenization and being able to share tokens across my different products that we talked about. Those type of things make it easy for me to run my business, so that if I get a transaction in one of my systems and I can do a chargeback in another one of my systems and I have a way to track that, that of course is a big win for me, right? So that I could do a card present transaction, but instead of having to have the person come back in and do a refund for that, because I forgot one piece of the order, they can call me up and I can do it refund remotely through a card not present type transaction through utilization of the token of the transaction that I had done previously. So anything that from an operational standpoint, any of those things specifically are huge benefactors. And you know, like I said, for me, the big ones really are the onboarding aspect of it, the reporting aspect of it, and then the transactional management components of it specifically for a merchant.
So the merchant thinks about, you know, having as many ways to get paid as possible. They think about, you know, getting a report or logging in and seeing how much is supposed to be in their bank account. They want to get their money in their bank account, want to make sure that they can reconcile, it sounds like. And if there's unfortunately a dispute on the transaction, they got to deal with the dispute. And what I'm hearing you say is you don't want to have a different report for your transactions that are tapped and swiped and dipped versus soft pause versus, you know, when you accept payments online. Because if you get 3 different deposits with 3 different fees, with 3 different places to go to see your transactions, it's just a big mess. Did I hear that right, Coy?
It just makes it much harder to reconcile everything. That is correct.
So if you think about it as a software company, what I'm hearing, and Dustin, maybe you can sort of unpack this a little bit. What I'm hearing is if you're a software company and you want to be able to take all of this breadth of capabilities, you want to do it simply in a few weeks. You want to be able to evolve when something new like SoftPOS comes up. What happens if the vendor you chose to do all this other stuff doesn't have SoftPOS yet? Either you're waiting for it or you have to pick a second vendor. So how does that play out with the software companies?
Well, you're making such a good point, because the choice of a software company, if you box yourself in and select a partner that is not able to either develop or integrate to other partners that give you the latest and greatest, all of a sudden you're going to be behind in your desire to meet customer experiences and monitor and operate your business. I really like the way Coy is highlighting the distinction between card present, card not present, and the necessity to drive all of this reporting and reconciliation, all the accuracy of that data. But what I would say is, in addition to that, payments have become strategic. If you choose a software vendor that is able to feed you information on your customer behavior insofar as their interaction with your payment capabilities, that gives you a leg up. What are the channels that your customers are operating through? What is their payment behavior? Are they cross-selling? Are they upselling? It really helps you as a business use your payment data to understand how your customers are interacting with you as a merchant. And if you as a merchant select a software vendor that is not able to bring to the table all of the latest innovations and integrate to the winners in the space, you're not going to be able to take advantage of the fact that payments have become strategic. So, Todd, the point that you're making, I think, is paramount. As a merchant, you need to select a vendor that may not have everything today, but has the capacity to integrate and to bring to the table the solutions that are here tomorrow.
So if you integrate with one party and you get everything from them, they've got to keep up with absolutely everything. And I don't think anybody can. But if you provide a way to get access to all the technology as it keeps coming in, you can keep up with the market. And I think that's a big part of what we are looking for from our partners at Infinicept, that we are very focused on making sure that that infrastructure is set up that way. Okay, well, let's close this out with a little bit on you touched on it earlier with AI, but what are we seeing with AI to improve the customer experience, Dustin?
Well, I think we're seeing AI's enormous capacity to protect transactions, both authorize the transaction and, more importantly, authenticate a user. And why that matters is, from the merchant's point of view, you increase your acceptance rate, which is very important to the efficiency of a business. And from a customer point of view, you reduce the likely step ups that are required in any payment transaction, removing friction from that transaction, especially in a guest checkout scenario. So AI has this enormous capacity to be able to better authorize users, drive acceptance rates, and increase the speed of transactions. And the thing about AI is we can't possibly predict which direction it's going to go because, as I said earlier, AI is leveraged by fraudsters to defraud transactions and leveraged by the good guys to be able to protect against transactions. So at the moment, it's impossible to predict. And I believe there will be winners and losers in this race. I believe that merchants, software vendors, software partners are going to be able to flexibly integrate, right? Provided their infrastructure is sufficiently flexible, Todd, to your point, with the companies that win in this space, and they can delegate authentication to the companies that are best leverage AI to protect and improve the consumer experience. So I don't think we know where it's going to go. And the fact that we don't know augments the importance of selecting the right vendor who has the infrastructure to integrate with the people who win in the space.
So I think I'm going to close out the talking part before we ask for some questions. If anyone wants to find out, we take an approach at Infinicept of making this really easy to deal with all this complexity. And without going into a commercial, if you want to understand as an ISV how to take advantage of the breadth of functionality without having to do a lot of integrations and setting yourself up to have a future where you can own your customer experience and evolve with the technology. If you reach out, we can show you the ways to do that and how to keep a consistent merchant experience with things like how they get their reporting, how they get their money in the bank account once each day, how their fees look and the portals look and things like that. So let's open it up. If there are any questions about that from the audience that's here, we can take some questions. Otherwise, we'll do a wrap up. Any questions from the audience? I don't know if there's I think there's a raise your hand button or there aren't any questions yet. Okay. Well, thank you very much to the audience. We appreciate you sharing the time with us. Thank you, Dustin and Coy, for spending an hour almost with us today. And certainly reach out if you want to ask some questions privately. Thank you very much.